Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport, and this is your Dairy Week in Review for June 5th, 2014. Now, just a quick note here before we jump into things. This video is being recorded on Thursday of this week, so just note that all the prices that you see are just through Thursday's settlement and doesn't include the last day of the session for the week here. But taking a look at how things are positioned now through the settlement of Thursday's trade, blocks are up on the week so far at $2.05 even, up 9 cents. Barrels are at $1.96 3/4, up 3.5 cents on the week so far. Cash butter pulled back a little bit this week, trading at $2.24 even at the settlement of Thursday's cash session. That's down 6 cents on the week so far. July whey settled at 64 3/4 on Thursday, down just 0.2 cents on the week here. And July non-fat dry milk settled at 178 even. That's down just 1 cent on the week so far. Now shifting gears here over to Class 3 futures. Now May milk did expire on Tuesday of this week, so that now puts July in that second month spot here. And July finished at 20.70 at the close of Thursday's session. That's up just 8 cents on the week. August settled at 20.55, up 25 cents on the week so far. So as of Thursday's close, the 2014 average for the Class 3 futures is at 21.35, and that's a gain of 7 cents from last week's close. Now let's get into what we've been seeing in cash cheese here this week. Now here we have a weekly chart of the block barrel average. Now as you can see here, we've been in this really steep downtrend going back to the end of March here, and we have seen at least a couple of up weeks here over the course of the past 3 weeks, and really we've only seen 3 up weeks in this whole downtrend here. It's been a decent week overall so far, and we've seen the block barrel average as of today's settlement now pull back above the $2 a pound mark, and we were down below that for about 2 weeks in a row here, and we settled really near the low last week. But prices have come back, and it seems the buyers are really willing to step in and bid pretty aggressively at these lower prices here, but at the same time they are being met with quite a few offers from the sellers. So it seems like the prices where we're at right now, right around that $2 a pound level, is just an area where the buyers are willing to buy a lot and the sellers are willing to sell a lot. So it seems like we found a little bit of a market equilibrium for the time being anyway. But it also has been a lot of volume moving in cash cheese here compared to what we've been seeing over the past couple of months. And it's also led to a little bit of volatility in the milk market as well, given that we're seeing a lot of buying interest as well as a lot of selling interest. So on the week so far, again, just to recap, the block barrel average did pull back above that $2 a pound level here as of Thursday's session, and we're up 6 1/4 cents on the average as of the close of Thursday's session. So let's shift over to our second month milk chart now. As I mentioned earlier, May milk did expire on Tuesday of this week, so that now puts July in that second month spot. So we have seen a roll here on the contract representing July milk. Now as you can see here, as I mentioned, we've been seeing quite a bit of choppiness here take place, and we've been seeing really some volatility more or less within a pretty wide range of about $1.25 to $1.50 or so. And we've seen a few limit moves here going back through the past couple of weeks. So volatility has definitely picked up here. Now, we haven't really broken out of this wide range that we've been in, and if we do, that probably would open up the door for a bigger picture move here. Now, if we break out of this range to the downside, as you can see, there's not a whole lot of support below the market there, so that could open the door for a bigger sell-off. But then again, if we are able to break out of this range to the upside, that may be just the thing we need to get that next leg higher. So things get really mixed when we see trade like this, and it's hard to tell which way the market may be headed. So just need to make sure that we do have a plan in place either way. Now on the week so far, the July contract has posted a gain of just 8 cents, and really we've been seeing some 30-cent gains as well as some 30-cent losses. So all in all on the week so far, we haven't really seen much of a development at all. Again, just up 8 cents so far. Now, taking a look at some different fundamentals here, we did get our latest export numbers for the month of April as well as our monthly cheese production numbers. So we'll start out here with our April cheese production numbers. Now, cheese production was up 2.2% year over year here. We were down about 1.8% from where we were at the month prior in March, but as you can see on the chart here, that's a pretty normal seasonal downtick from March to April. So the thing we really want to focus on here is that growth on a year-over-year basis. You can see that we really started out the year with really not much growth. You can see that purple line compared to the green line of 2013 came in right around even going past that first quarter there. But now you can see that we're starting to get a little bit of separation here between the two lines, and we'll have to see if that continues. So if cheese production is really beginning to pick up here and we're going to see that year-over-year growth going forward, that would mean that the tight supplies would probably begin to start replenishing themselves, and that could put a little bit of pressure on prices. So again, we'll have to see if this year-over-year growth continues as we go through the next few months here. Now let's take a look at our dairy exports. So we did get our latest April dairy export numbers. Now as you can see here, we actually did see a bit of a drop off from March to April as far as dairy exports go. Now you can see this green line outlined in the yellow here represents our 2014 export pace, and that's compared to the past 2 years. But you can see that all year so far, exports have really been very strong, and these green bars have been quite a bit above the blue bar that represents 2013. Now you can see here that we did put in record exports in the month of March, and that takes out our prior record high that was actually put in May of 2013, and that's represented by this blue bar right here. Now, you can see that we did pull back a little bit here. We were down 7.3% from the month of March, but still up 6.4% from April of 2013. So the fact that we're still up year over year is a good sign, but one thing that we'll want to watch for is if we really continue this downtrend on a month-over-month basis, there's a good chance that that could really put some pressure on prices, as our domestic prices may have to come down to remain more competitive from a global standpoint. Now, a lot of the strength that we've seen in Class 3 going back maybe all the way to August or so has really been supported by these very strong exports, and they've been very strong going back to about April of 2013 or so is where they really started to take off, and any fall off in export demand would more than likely cause quite a bit of pressure on Class 3 prices. So taking a look at what we have coming next week, not a ton as far as dairy fundamentals go, but we are going to get our next USDA supply and demand and crop production report, which will be out at 11 a.m. Central Time on Wednesday. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thanks for watching and have a great week.